Good morning, it's Jeffrey Christian from CPM Group. It's about 7:30 in the morning on Friday, the 16th of September. Gold and silver prices have fallen sharply, along with the prices of a number of other commodities, platinum, palladium, the stock market, and everything. They're reacting to higher inflation figures that came out this week suggest that the Fed will probably raise interest rates aggressively at the FOMC meeting next week. The consensus had been that the Fed might raise interest rates 50 basis points next week. I have noticed that other mainstream rational economists are now saying that it could be 75 basis points or even a 1% increase because of the strength in the inflation figures that came out for August. I'm not quite sure if that's true, but clearly the financial markets are spooked by the prospect of even higher interest rates. Again, we don't think that that's a particular problem. Interest rates, even if they do rise 1% in September and another 25 basis points again in November and December, would probably only be around 4.25 to 4.5%, which would be at pretty much historically low levels compared to 1960 to 2000, and still probably not so much as to hurt the economy or prohibit people from buying gold. 4.5%, if you still have 6 or 8% inflation at the time, by the time you get there, you're still talking about negative real interest rates of 2 to 4%, which would not necessarily discourage people from saying, I think I'd rather own gold. I really wanted to focus today on record gold prices. We keep being asked, why are gold prices so low? And the reality is that gold prices are not so low. In fact, gold prices are at record levels. If you look at it on an annual or average basis, that's pretty much where we're at. The highest quarterly average price for gold was in the third quarter of 2020, and that's when the gold price had gone from around $1,280 to about $1,900 on an annual basis. Actually broke above $2,000 on an intraday basis for the first time in history, and on a settlement basis. But for one day it was over $2,000. For the entire quarter, the average price was $1,904. We look at intraday prices for short-term investors, and we look at quarterly and annual prices for mining companies, processors, industrial users, longer-term investors. And it's really what's important for more people. Trying to pick spikes up and down is a treacherous business. It's on the downhill, it's called trying to catch a falling knife. We've got a pretty good track record doing that, but it's much more logical to think in terms of longer term prices on a quarterly and annual basis. Now, at the time, 2020, average quarterly price in the third quarter was $1,900, and the annual average price was a record $1,775. That was surpassed last year. I'm going to put my glasses on, and you can see that the gold price in 2021 averaged, here it's $1,800. If you look at it, average of daily prices, it's $1,799 last year, $1,800. This year, in the first half of the year, the gold prices averaged $1,876. And looking at our projections for the third and fourth quarter of this year, you're still looking at $1,826 on an annual average basis. So gold prices are on track to be at record levels on an annual basis this year. And they're not that far off on a quarterly basis. Yes, you can say, oh, well, the price spiked over $2,000 on August 9th of 2020. And yes, you can say that when Russia invaded the Ukraine, the price of gold spiked over $2,100 on a one-day basis. But on a quarterly average basis, we're not that far off from the 2020 peak, and we're far higher than previous periods. Let's take a look at some charts to help drive this home. Here's the long-term gold price. These are monthly average prices, and you can see that, yes, we're down from that peak in August of 2020, but we are basically at record high prices on a monthly average basis, far above where we were in 1980 and in 2000. These are shorter term prices. This is the daily price since 2011. You can see the spike up to what was then a record price in September of 2011 when the U.S. Treasury was downgraded for the first time in history by S&P and other grading companies. And on the right-hand side, this is from our September 8th Precious Metals Advisory. These are our 3-month projections. And you can see we were talking about the idea that the price could spike down to 1680 graphically. In terms of the text in our trade recommendations that our paying clients get, and in terms of the text in the Precious Metals Advisory and elsewhere, we've been saying that the price was going to weaken in the summer period from June through September. B, the price could drop down to 1680 or even 1650, 1660. And I think it got down to about 1664 this morning. So we had been expecting somewhat weaker prices on a cyclical basis and a seasonal basis, and we're seeing that. Investors who were very concerned about inflation and interest rates and recession in the first quarter, with the added fill-up of the Russian invasion of Ukraine, are less concerned about inflation, less concerned about the negative effects on gold of rising interest rates, and less concerned of an immediate recession. They're still worried about inflation, but is showing signs of topping off over the course of July and August, and peaking, plateauing, and possibly declining, not as much as people thought a year ago, but declining over the longer term. They're still worried about a recession, but the view has become more sensible in mainstream financial markets, and people are looking at late 2023 or 2024 as a possible onset of recession, with extremely weak economic growth conditions in the United States, Europe, Japan, China, and other countries over the period of time from now, the third quarter of 2022, through 2023. So no one's saying, oh, we're in the land of milk and honey. We are in a crisis, and it's going to get worse, if I may quote the video that we talked about last week from Jeffrey Christian, professor at Columbia University. But there's a less hysterical view and a more rational view. And the idea is that, yes, these problems are here. They're going to get worse. We will probably go into a recession. It could be a severe recession. We've been projecting for probably 10 years that it will be a severe recession. And it's there. In the meantime, we expect gold prices to bottom out in the current quarter. We've been saying that for months. And start to rise modestly. You can see here our projections for October and November, a modest increase. We don't see it rising that sharply either in the fourth quarter of this year or really going into 2023. At some point, when the crises do get worse and we have more problems, then we would expect higher gold prices. And we are still projecting even higher record gold prices in the next 3 to 5 years. Just not right now. But right now, we're content with the fact that on a monthly, quarterly, and annual basis, we're seeing record prices. And I just want to bring this one up again because people keep talking about it. Gold does not move lockstep with inflation. And in fact, between 2000 and 2021, there's been a negative 9% correlation between changes in inflation rates and changes in the real gold price. Gold prices have risen sharply in the absence of inflation over the last 20 years. Inflation only began rising in 2021, and gold prices had already reached a record level in 2020. It doesn't take inflation to cause gold prices to rise to record levels. Other factors figure in, causing investors to buy more gold. If you look at investment demand, 2018, 2019, it was less than 20 million ounces. It was about 16, 17 million ounces of net physical demand for gold, or net investment demand for physical gold, be it very explicit. On a net basis, investors bought about 16, 17 million ounces of gold each year in those 2 years, and the price of gold was averaging around $1,300 a year. 2020, investors bought 40 million ounces, more than twice as much as they had in each of the previous 2 years, and the gold price rose very sharply in an absence of inflation. Inflation was less than 2% back then. So you can go back to that table and you can see we are basically at record levels for gold prices. It's not that gold prices are so low. In fact, gold prices sort of anticipated what was going to happen over the course of 2021, and they rose in advance of inflation and other factors. People who think that gold prices should be much higher have an irrational view of what gold prices should be doing. It's not there. That's all I have for today. Enjoy yourself. Enjoy your weekend. Take care. Wash your hands. Blow your nose. Wear your mask if you're out in public. And we'll talk to you next week. In the meantime, be good to yourself, those around you, and the whole wide world.